We're going to be talking about UPS, which I did not have a position in, and I was monitoring mostly because I do tend to focus on Amazon quite a lot, which, as you can see from the list that is tagged in the show notes, I have mostly been short it for the last year and a half or so. The thing with Amazon is its valuation is really kind of a funky thing. But UPS being one of the biggest overflow carriers for them, usually doing about 30 to 40% of its revenue off of Amazon, historically now a little bit different of a mix. It can be quite telling to monitor it, even though Amazon does have a little bit of a different mix of business. So what I'm going to do is I'm going to first go through UPS, and then I'm going to talk to some of the other companies that I sometimes use to get a sense for what's going to end up happening on Amazon's earnings this quarter relative to what the street estimate is. Now, let me do the quick disclaimers as per usual. Past performance is not indicative of future returns. This is right in the heart of earnings week. So there's loads of companies that are reporting like crazy. Amazon will report after the close on Thursday, which gives you only Friday to deal with it. And it'll report along with Google. Meta reports tomorrow, and we'll have yet another data point on what's going on as relates to all kinds of stuff consumer, for lack of a better way to describe it. And the other thing I would just notice is that we do have some economic data that's come out. Consumer confidence, not so confident today is what it really showed. And then we've got the Fed funds announcement, which will set all of this rallying stuff that happens into a bit of a tizzy. Just realize that when Fed funds comes out, oftentimes the reaction can then recontract the following day. But I do think that we've been seeing a lot of short covering over the last 3 days. You might get a little bit of a different reaction. It kind of scares me. I want to go into Fed funds with a bit more cash, even if it means I miss the first little bit of it. But you got to be really careful because sometimes what happens on Wednesday can flow through Thursday and then run out of steam. So just be careful if you're doing day trading over the next couple of days instead of if you're doing investing, you might also get an opportunity. Really briefly, I do want to show this. I've been to a few more since I've posted this, but this is kind of my own personal going. Tip, I do this list because that if I just go by what is happening via the street is telling me, I either get a companies well or not. And that is because some they lower estimates are doing any number of weird things with their estimates, and it'll get reported and reflecting. But essentially about 58% companies have reported top line growth, revenue growth, along with the ability to make enough to not have margin compression such that growth is negative on earnings. That's the way that I think of it. You could have top line growth that is much higher than earnings per share growth, but we do have it's expected. The thing is that the companies that are reporting poorly are really puking it out. Like I usually do not have this many in the first 100 that truly are just bad. So we have very much so setting up for the beginning of this year thematics of companies that have it under control and companies really do not have it under control. And so I think it's going to be that kind of year, at least through the first half. In a lot of ways, most of these companies, UPS included, which we're into, is really setting up and dependent upon the back half of this year doing ugly. And I, with UPS, it's so crazy because the way that it's being reported is such an amazing beat. What a great quarter. Yeah. Cheating in the sense of using even more doctored up than what I'm seeing. But this wasn't a great quarter. And not only was it not a great quarter, they told me that it's going to actually be a problem for pretty much all of the year, positive upside to the back half of the year. So it's not this, it's weird. And I do want to show you, okay, most of the earnings articles I double checked are not so bad that they're including this pension expense. But what they are doing is they're saying, oh, it beat estimates. And then they're not giving you a sense for how much this pension expense allowed them to look fantastic. And so it was about 1.3 billion, not pension expense, but a pension mark to market, which I got to tell you, I don't usually see that period, for lack of a better way to say it. It usually, even if the pension does really well, it doesn't come into the income statement like this, but they are marking it. And that's probably just because they're trying to be very like a certain way with the gap counter. So technically it's not wrong, but if you remove that, you do get that 360 that everybody is saying, 363, I think it is, that everybody's saying, which in theory is better than expected. But I do want to show you that it's actually still not great per se. And that is because relative to previous quarters, it's still down significantly. Oh my gosh, did I just leave it off? Yeah, it's down year over year for sure. So if you take it off, you'll see it's down 25% on net income. Okay, so that's not great. If you had 2.7% less revenue and you made 25% less net income, then some of these stories that are pretending like cost saving at UPS was just so fabulous, they think of cost savings very differently than the way I think of cost savings. I think of cost savings as 2% down revenue growth, 2% down operating income. Oh my gosh, I'm such a boss because I don't have margin compression off of lower economy of scale. I don't think that's what actually happened here, is what I'm saying. And so you can see those numbers down here. If you readjust, you have a down 25% net income year over year. They're still making money, and that's awesome sauce. But I just don't understand how you can rally 5% with that. So, the only other thing where I may, if it keeps running like this, I may get really excited and just buy some puts or sell some calls against it, call spreads against it, just because it doesn't really deserve that. That said, there are some people that are like, hey, May, don't you feel like with valuation, it's kind of cheap at 14 times and whatever? And I would say, I don't know, because quite frankly, their guidance didn't make me feel so thrilled that I should be giving them so much love, up 5%. And because, given what they said, there's every possibility that the rest of the year comes in weak as well. So then I don't know if this earnings multiple is the right one, or I should start really being more aggressive on the year because they're being nice. I mean, you still have the Teamsters that are going to come in here and say what's what, and they're going to renegotiate that. Now, on the call, they're saying that this kind of quarter gives them more ability to negotiate with the Teamsters. But you know what? I'm not sure on that, is really what I have to say. Okay. The rest of the stuff to take a look at, cash equivalents was down significantly. So they did draw down cash. A lot of that was to do CapEx, but they did actually pay back some debt. So about half of that cash went to pay back debt. And then some of it went to some of the CapEx that they're doing that in theory sets them up to be a better company on the other side of things. Here again, you can see the pension and post-retirement expense. I'm sorry, this is actually not highlighting the right thing, but 2.3 billion versus last year's mark was only 576, and then so on and so forth. So when you get that, you do have a cash flow. In cash flow, still a strong, healthy cash flows. So it's not like I'm like, oh my gosh, what's going to happen to UPS? But it wasn't, like I said, up 5% on the quarter. The other thing I'd mention too is you do have a pretty big uptick in stock-based compensation, and that may help them through the year. But at the same time, I mean, people need to feed their kids and get paid. So there's that as well. Other things that I would just note, so it would have been okay if it was just a function of we just need to raise prices. But in fact, you can see very clearly on this slide from their investor deck that they actually had lower volumes and they got tons of pricing despite that, but lower volumes. And I would argue that if I was a Teamster, I would use this slide to stick it to them as far as like negotiation goes, because, or vice versa, but that's something to note. And they are charging more per piece. Okay. So then we look at trends in volume. And I think this is very, very relevant. And again, why I'm not super stoked. And then you want to kind of hold this in your mind because eventually we're going to get to Amazon. Asia actually was up a bit, but down year over year. So the way that you read this along the left is where it did relative to last year. So you can see if it's below this zero line, it means that there was less volume. And you can see that every single one of these is below that zero. So volume was lower, not just in the US, but literally everywhere. And also, although in Asia, it started to pick back up, it literally didn't pick back up anywhere else relative to last year. It was down a lot. So yeah, and the fourth quarter, as you know, is when people ship the most. So really, all of this Uber excitement, I mean, you got to really be such an optimist to be giving them you got to be such an optimist to think that you're not going to have another quarter like this between now and when it finally goes to Christmas of next year, because it's really the three worst quarters as relates to any kind of merchandise being shipped. And you've got a number of little things where people have already told you they're waiting to the back half of this year. Okay, but that's not all the bad news, unfortunately. Here's the other bad news that everybody is like not writing about for some. I don't understand these people sometimes. So here's your free cash flow. All right, CapEx was a huge spend. Maybe people are thinking the CapEx won't be as big next year. That's probably true, but we also have volume and other hits. And I really got to see that CapEx make money. I think this is the type of CapEx that's going to like help you in like when we are on the other side of this. I don't think it helps you enough this year to be this exciting uptick for free cash flow. Maybe I'm being too bearish. Okay. Also, return to shareholders. They're really excited to tell investors that they're giving us back money. I'm not, I mean, like, I don't kind of want you to be honest. If you're going to have all these issues, I want you to make sure that you have enough cash to take care of all the possible weird issues that could come up in this following year. And then debt to EBITDA, this unambiguously though is positive. Like lowering your debt expense is the right call if you have excess cash. So I'm actually cool with that as far as that goes. So EBITDA tells you like how much cash you have to cover the debt liability that you have on a regular basis. They are totally comfortable. So my negativity, so to speak, doesn't come from thinking, oh my God, they're a terrible company, so much as I'm not convinced this is the right way to do it, given that you're telling me that it's not going to be a great year. And what do I mean by it's not going to be a great year? In case we are confused, I am not confused that equities investors care about future earnings. This was their full year outlook, which is average daily volume down slightly in the US, down low single digits international, and then supply chain issues still being an issue. But then even more so, they also suggested that freight prices will decline for both air and sea. So they don't expect the upside, and they do expect pressure to pricing coming from that. And you tell me that, I'm just kind of like, yo, you're up 5% on the day. What's up with that? Anyways, so just a little bit, one more slide to get through here. What does that imply for Amazon? Okay, clear as day, they told us that volumes were down in December in particular, and then we can see that was for the US. You remember the Amazon's exposure to Asia is really limited, and its exposure to Europe is a certain way. Okay, so it's like really it's Europe and the US. I mean, India is a very small part of Amazon's business. And quite frankly, internationally, they never make money on their retail. It's always operating cash flow negative. So if the US piece, which started to be okay, comes out and pukes out because December was down 5 for UPS, no less, right? So down 5 for UPS means that they didn't have the overflow for the holiday season. So we don't even know what they did experience. So retail, not so great. A lot of you guys are like, May, you don't get it. The cloud business, yada, yada. Okay, that's a little bit mean is what I would have to say. But in fact, I do get it. Here's the other two companies that have reported cloud thus far. It would be IBM. And they had about 11% growth on the quarter year over year, but realize that last year and last quarter, they were growing at 16%, et cetera. So this represents a slowdown and a continuous slowing down of growth. IBM, as we know from last quarter, was actually taking some share from the entire cloud space. Now, I know they do kind of little baby different things here and there, and it is about the tech stack. Nonetheless, this really represented an overall slowing in the cloud business. Microsoft as well came out and showed also slowing relative to previous quarters. For context, last year, it was 24.31 constant currency. This quarter, it was 18.24. So if you're depending on the cloud business to compensate for the failures in retail, and I've said this video after video after video, the retail business basically robs the cloud business of a certain amount of operating income. Sometimes it can be as much as a 30% drag on operating income if you look at the loss on retail versus the gain on AWS. So, okay, in October, they grew at 27%. I thought I'd throw that into it to give you context of how much bigger the business is as a percentage of Amazon's growth. Okay, it's only about a third of the total revenue for Amazon. But just to give you a sense for it, where will it be? I don't know. Now, here's the thing. I don't get a really great sense for how conservative the street is being. So while I may do calendar spreads that are short, I won't go through what that is. And if that's not something you know how to do, I don't recommend you do it. Some people may buy puts. I wouldn't go big or go home until after they report the quarter. And the thing that's so bizarre about Amazon is sometimes they'll report the quarter and what happens in the aftermarket stays in the aftermarket, very much so like Vegas, right? And it does not carry over into the morning because a lot of times you get this weird knee-jerk reaction. Then when you go through the numbers, you're like, oh, wow, this was not good. And it just takes all of the analysts a half a beat. So I know that that's not necessarily the most satisfying thing. It's not the strongest call that I have as far as things go, just because Amazon can sometimes trade with its own deal. But quite frankly, if I'm to extract what IBM told me, Microsoft told me, et cetera, IBM and Microsoft told me that really you want to think about this first 2 quarters as kind of a wash. And it's going to be fine. I'm guiding like a little bit more conservatively, and we're looking for the back half of the year for global pickup. That's what IBM and Microsoft told me. UPS told me that this is really a 2024 game for them. So, if that's the case, then you have a cloud business attached to something that might drag them, is what I'm saying. And so that's why I wanted to come out with that are, if you're long Amazon because you've owned the very beginning and you're ready for retirement, talk to your broker in the next day and a half about how to hedge it. Because quite frankly, the puts aren't trading like people are concerned about the quarter at this point. So you may be able to find a structure that hedges out your situation pretty decently. And with that, stop sharing and take questions. Hey, David, how are you doing?
Hey, good, May. How are you?
Good.
Okay, UPS is down 5%. They carry a lot of Amazon stuff or overflow. So,
yeah,
the holiday season isn't what it used to be.
Yeah.
What?
No,
they're up.
It really isn't. Yeah, they're up 5%. That's what drove me crazy.
UPS was up or down?
It traded up.
No.
It's trading
the
up.
Actual report. The actual report.
Oh, sorry. UPS was down 2% on revenue, down 25% on earnings year over year, unless you were to include that $1.3 billion of non-cash benefit that they got from business, which I am not willing to give them credit for that. Yeah, no one does. No one should. And in fairness, they didn't talk like they should. It's just whether or not the AI that now writes all the articles for all of news media gave them credit. And then in theory, they beat street estimates, which are at $3.58. I think if you do the math and divide by the share count, you get to $3.06. So they maybe beat street estimates by a little tiny touch. But my point is, you beat street estimates, but you're still down 25% on earnings. And you were telling me, hey, it's going to be a rough year. We're going to try to be really conservative and manage costs all year. That's not an up 5% on this. That's not like, oh my gosh, let me buy the heck out of this stock kind of quarter. Do you know what I mean?
Right. And they use pension.
Sorry if that wasn't clear.
They use pension as an asset? The pension fund?
Well,
I don't get that.
To market pension assets. So GE, okay, so just for everybody else that might be still coming in on how to think about UPS got a gigantic pension, right? All that stuff. And so for whatever reason, the way that their accounting works, and it can vary from company to company, is that the pension component, it's a non-cash benefit sometimes, depending on how your stuff is set up, okay? But for companies like UPS, it'll look like a non-cash benefit to earnings. In other words, you mark it and it looks a certain way on the income statement. It's all below the line. So you can look at operating income to see what's up. That's how the accounting goes. And then it shows in the cash flow because it's non-cash, it's got to come out of that number. And so the other way to do it is just straight pull it out of earnings. It was 30 cents on earnings this quarter that it ended up benefiting the company. So it looks cosmetically, if you're just using data feeds, it looks like it was an amazing quarter. If you're reading the news articles, they're doing that sort of thing, but then they're saying, oh, but it beat street estimates were lower, so it was awesome. Okay, I think they beat street estimates, but you still were showing significantly slowing growth year over year and telling me that growth was going to slow for the entirety of 2023. Like, you're not even trying to pretend like fourth quarter is going to be decent. And part of the reason you're not willing to pretend like fourth quarter is going to be decent, and I give her full props for this, quite frankly, is because and I know that you're not going to get these like really ridiculously high freight ocean liner, ocean and air prices that you were getting last year, or even like what you got this year, strangely enough.
Right.
The boats are empty, in other words.
And this was the full fourth quarter, so that included all the holidays. All right.
Included all the holidays. So, yeah, it's a good question.
So what you're saying is Amazon should report weekly, right? Week.
Yeah, because last quarter, WEAK. So if they somehow manage to eke out, I would be so shocked if they manage to eke out a good quarter, then yeah, they'll deserve to rally. And I'm always scared, right? I'm always a little bit nervous. You've got the stock long regardless, because you've owned it for a lot longer. I do own it in certain accounts. I'm probably not going to, I've definitely pared down a lot. If it were me, I would still, even if I didn't get to participate in the upside if something happened on Amazon, I would want this thing hedged, right? Because right now Amazon's at 102 and that bad boy has traded at $80. So that could be, if it really coughs it out, it could really be painful for a holder of Amazon. You can do put spreads. I don't have the screen in front of me, but if you're someone that, look, if you've owned this since before, so if you've owned this since the point at which they were selling books, mostly, you're not going to sell it. I get it, right? How can you sell it? You're going to take this massive tax situation on it unless it's just in your IRA. Right. So I get that. I feel you on that. Call your broker and hedge it out, is what I'm saying.
So they report February 2nd. We could hedge using February 3rd.
You can hedge using February 3rd to try to be cheap, or you can go a week back and then realize that this bad boy could bounce. But I really I know that some of the stocks I make sure to talk about because I know you care for sure. You know what I'm saying? So that's why I wanted to do this call today, because between UPS, IBM, and Microsoft, I was not feeling great. Because you got to think, okay, the Amazon Web Service business legit makes money. It legit makes money. But the retail business, which still is 3/4 of the revenue, does not make money and has not made money since COVID, essentially.
Right.
Ever since COVID, it's just been a financial dragon baby situation of a decent quarter it's still, the thing was, the U.S. started to make it basically didn't lose money. It's not right to say it made money, but it didn't lose money because basically they started charging sellers more, right? Not because they were retailing it like champs and selling more product. They just started charging sellers more, right? That seller business is decent. And also, in fairness, Whole Foods does just fine right now because of inflation, right? So the U.S. started just baby do a little bit better. International is still a piece of mess, so to speak. And then the cloud business started to show weakness last quarter. It didn't make as much as it used to. So now here we are hanging out in the fourth quarter. The bet that Amazon's going to do well really requires, because you got already the recovery from last quarter, it requires that the retail business didn't sop up all the capital and the cloud business was at least flat. Do you know what I mean? And I'm saying, when I look at IBM and Microsoft, if they were flat, they might even get away with it, so to speak. They really shouldn't, but they would at least get away with it. But if they were down on that cloud business, then it's a real question mark what's paying for the retail business, which is still 3/4 of the revenue and a huge component of spend. That's my deal. That's my issue with Amazon.
Got it. Okay. Yeah. Perfect. Yeah. You've done really well on Amazon.
I mean, look, like I said, if you've owned it since the moment it was selling books, I get it. Don't sell it. You'll take this massive taxable gain that you just may not feel like doing here in January. But if you want to hedge it out, you want to call your broker and give them some commissions on that and not feel bad about it. That's how I would be. And I apologize in advance for anyone. There's, again, we're not making recommendations here. This is just what I personally would do. I hope I don't get in trouble for this. I'm always worried because the SEC is so weird about just telling people any information, but you know.
No, it's for education. That's all
it is. You, okay? Make your own decisions. But
yeah.
I don't know. We'll see.
You'll hear from my attorney.
Oh no. I mean, like it could still really well, but this may be a quarter where you are happy to just let it go just in case. It's just because the drop could be so aggressive. You know what I mean?
We'll hedge it.
Like this bad boy's traded up for. Yeah.
Yeah, we'll hedge it.
Yeah, I mean,
you're going to do GM.
Yeah,
are you going to do General Motors tonight?
I'm going to do GM later
today. Okay.
I'll try to do it later tonight. I had the call already, and there were a couple things I didn't understand, so I want to go through it one more time just to be careful. But yeah. The big thing is I will just go ahead and preview this. They gave a bunch of money to Lithium America. And that always has a really deceiving name because I know you texted me to ask quickly about it. And I have looked from time to time at Lithium America because I do take positions regularly on Albemarle. Albemarle, I'll always say, is the biggest lithium producer. And I'll say that, and people be like, well, what about Lithium America? Couple things that you got to understand. Number one of my issues with Lithium America is that they don't have any revenue. And so it's really hard for me to believe they produce more lithium than Albemarle, which makes plenty of revenue and tells you the exact tonnage when they don't actually have a revenue line. So my suspicion is what they actually have, and I got to do more work on it. It's just a bunch of lithium mines that they have not gotten to the point where they can actually sell that product out. And so I think that they are basically a private equity company pretending to be something that's not a private equity, which happened during COVID. A lot of these bankers got really fancy and decided to take private equity investments public. And in fact, these are companies that have no revenue yet. And really, you got to be analyzing them in a way that I'm not accustomed to. Let me say it that way. So that's my issue. So I want to double down. I will definitely listen to the quarter because there is a massive shortage of lithium. No one's confused about that. And if anything, when China opens back up, a huge component, I think almost 40%, don't quote me on that. Y'all got to double check this stuff on Albemarle. 40% of their lithium is actually off of lithium mining in China. So that, which might have been helping product production of various things, okay, things that go to Europe, things that go to throughout Asia, et cetera, that there might be a little bit of pressure going on there, which makes lithium prices shoot up. Anyways, whatever, we'll do that once Albemarle reports later in February. It might be later, sometime in the next 2 weeks or so.
Okay, you have a question about Meta. Are you in Meta? Are you following?
Oh my gosh, Meta scares me as far as that goes, and I don't have a really good call on it. It's just that most of their revenue really does come from ad revenue. I mean, when it comes down to it, is ad revenue fair and square, and it's going to be ad revenue off of Instagram and Facebook. I'm not convinced that everybody's spent on ad revenue. And in particular, I'm not convinced that people have considered how much money the crypto companies were spending on ad revenue. So in fair, I have baby little small positions just so that I make sure it's not off my radar screen that are short on pretty much anything that's primary revenue is on ad spend, because I really think that in years past, the crypto market spent like crazy and they're just not going to do it. And all this now, a lot of the advertising. Now, a lot of people are really bullish Meta because they basically laid off a bunch of people. It's about $1 billion in cost savings. But for a company that market cap size, I don't know that $1 billion, even that sounds almost disturbing. Do you know what I mean? But I don't know that $1 billion is enough to compensate for aggressive declines in revenue if I'm right. If I'm wrong, I'm wrong. it's hard to tell. I thought I'd get a better pulse for what people are doing in advertising spending off this first part of the quarter. But unfortunately, a couple of companies that usually give you that early decided to report later in the quarter, strangely enough. Usually IPG or Omicron reports before Meta, and then you can get a sense for it. But this time they're all reporting in February. So I don't have a great call on Meta. But if I
it seems, yeah, ad revenue. It seems the only industries doing poorly are housing, real estate, and tech.
yeah.
So their ad revenue may be good. There's a chance. I don't know, but that's
It's a
the way I would
small
look at it.
chance, yeah. Well, in fairness, I think retail numbers are not going to come in strong. You know, and I also think that some of the ad revenue from overseas, because you got to think like, how's it look country by country?
Mm-hmm.
Um, and it's going to be hard to figure out what the strategy is there. So for example, Whirlpool reported this morning, right? And it was a terrible quarter, but the darn thing traded up nonetheless. This is why I'm saying, like, with Amazon, it could do either way. But it was horrible. I mean, y'all can say whatever you want, but I did not. If we're just talking, did they make money or not? Their strategy is to go more niche. In other words, they're like, we're not into this globalization anymore. We're just going to decrease the number of products and really just try to be profitable as heck on every single unit we sell. Okay, well, if that's your strategy and more than one company is going to do that, that's not great. I don't know another way to say it, for how you want to think about advertising. And then the other thing from last quarter that's kind of residual into this quarter is that even the areas of growth for Omicron and IPG, the two bigger advertisers, those were coming from experiential advertising, is what they're calling it, not digital advertising, which is what Meta is. So it's a tough call. If I had to pick a side, I don't have huge positions on this. One Love for Life. Wow, nice, very Bob Marley. I don't have a huge call on this. If I was forced, I would probably be more bearish than bullish for that reason. But I wish I could give you more. If you do own it and you're never going to sell it, which is a real thing, because I do think that they figure out all of this mess, then you may want to hedge that out as well. But I feel bad because if you're always hedging everything out, you never get the upside and then you get mad at me at some point. So these are all your own investment decisions that you got to make. It's worthwhile talking to your broker. You have until tomorrow night, though, because they will absolutely, like, they report after the close.
Cool. Okay. Thanks.
All right, guys, good luck in this market. Bye.